Alright guys, today is 29th of March 2026, Sunday, and we're about to open our Monday session. Okay, next week's session in roughly 2 hours 50 minutes. So we're looking at gold market, and here's the analysis. Just to let you know guys, please do execute the trades at your own risk, and this is not a suggestion, these are all my trading plans. Okay. So where can we expect buyers and sellers? First thing we're going to do top-down analysis, and this is a weekly market profile. So we're going to go from the bigger time frame to smaller time frames. Okay, so we can see this is the value of last week, and there's a buy tail. That means there was a lot of buying interest down here, and here's the edge of the value. Okay, market works in value. If you know how the market works, how the value works and everything, you're going to make money regardless. Okay, and if you have good money management, yes, there's value area high, there's value area low, but I'm not looking at that. I'm looking at the whole value itself. Okay, so I've identified that buyers will be, we can expect buyers around 4,300 and sellers around 45, 85, 50. However, looking at last week's market profile, we can see there's a poor high. So if the market was to break outside this value, break out of this value with single print, then I'll look to buy the market. Until then, until we get those initiation from the big buyers, I'm going to look to sell the market from this point and buy the market from this point. Okay, now let's go to daily TPO. Looking at daily TPO, we can see we have value up here where we can expect sellers to be sitting and buyers to be sitting down here. If the market was to break inside this value, we can expect sellers to be sitting up there and buyers to be sitting down there. But then again, there's a poor low down here and poor high up there, so keep those things in mind as well. Okay, what that means is if the market was to travel down to this point, expect this level to get broken. Okay, they will look to break this level, so do not use these levels as a standalone point of entry. You want to see whenever the market goes to these levels, you want to see the type of interactions taking place. And the way I like to see what kind of interaction taking place is by looking at the footprint. Okay, looking at the footprint, it tells me everything. So these are the points, price points. Let me just give you the price points quickly. 43.7565, then sellers at 44.71.65, buyers at 44.86.30, sellers at 45.33.80. And also guys, you can see I have this point where we can expect sellers to be sitting. Then again, look at this, there's a poor high. Okay, and if we were to look back a little bit, there's another value. So if this gets broken and if we see this value being rejected, we're going to look to short the market to the nearest value which is available at that time. Okay, now this is one of the smaller time frame I use for my entry and stuff. Okay, these are like each profile is 30 minutes time period and each sub period is like a minute. So you can say this is a minute profile, minute time frame. That's what you can say. For example, over here you can see market broke off this value. It's going to go to the next value. Okay. Over here, if it breaks up and carries on, where is it going to go? It's going to go all the way up there. Now let me show you what I mean. As you can see, on Friday, we broke this value. I was telling my friends, like, I'm looking to get to this value, and that's exactly what happened earlier. You saw market went up to this value, and this is one of the XFA account that I'm using with Top Step, including this one. I have 5 accounts. This one I passed like a month ago, but I forgot about it because I have accounts with Lucid, I have accounts with Take Profit Trader. I believe 10 accounts with those two companies and about 5 accounts with these guys, Top Step. So, yes, it's only 1200 guys. Gold has a lot of volatility recently. I'm using only one micro. That's all I'm trading, guys. And with one micro, if you're getting 1200 now across 15 accounts, just imagine how much money you're making. Okay, now let's go back to Sierra chart and I'll show you. Okay, over here you can see market broke through this, went up to this value, then it came, this value got rejected, came back to this value. If this value gets rejected, we can say it's going to go down there. Okay, now over here, okay, look at this. Market came down, bit some value here. Okay, if it built some value here, where is it going to go? Over here and breaks out of this value, sorry, it's going to go all the way up there. If this value gets rejected, where is it going to come down to this value? Okay, now how do I know this is a value? Let's have a look. Let's take these off so you guys understand exactly what I mean. So you can see this value is completely within this value. These blue lines, look at them. Value area high, value area low, value area low, value area high. These two values are completely within each other. So it's a composite profile. I'm going to put them together. Okay, and draw a box around it. Okay, and I'm going to mark the POC as well. Look what happened. Market came down to this value and got rejected. Okay, so next thing you can look for the market, you can expect the market to get to this area. There's no such thing as 100% when it comes to market, guys, so keep that in mind. Although, like, we know what we can expect. Never be married to your idea. Always have an alternative scenario in your head. For example, if I'm looking to buy, I have to know where I'm going to be wrong, and if I'm wrong, what kind of action I can expect in the market. Okay, people normally lose money whenever they're married to their ideas. Like, they're expecting buys. Their bias is so strong they don't even see the alternative scenarios. If the market was to go against them, they just keep adding to the position, and that's how they lose money and blow their accounts, which you do not want to do. Okay, in this market, you're going to lose money, you're going to make money. You just have to manage your money. That's all. You're a money manager. The moment you understand that, you're going to be successful in trading. And I've been doing this for past 15 years, guys, before even prop firm space existed. So I've been doing it for a very long time. And I've seen all kind of market condition. Okay, so obviously this is my entry chart. Let me see if I can show you guys some examples of this. Let's see if I can find a good example, because obviously these things, they do take time to develop, and yeah, you just gotta be patient. Okay, let's just take this as an example. I believe this is multiple profiles, so leave that alone. For example, up there, okay, market broke out of this with single print. That's going to be my entry on a minute time frame. My stop loss is going to be above the value, okay, and I'll try to trade it to the next value, wherever the value is. Okay, however far that value is, I'll try to take it to that point. Okay, so that's how I trade, guys. That's how I trade. Anyways, over here, market got rejected. Where is it gonna go? Whichever value is up there, that's where you can get to, and look, you got there. And on the way, you build some value as well. So if the market was to come down here, I'm gonna look for rejection around this value area and then go up there. Let's see if that happens. I believe it did, because I did take this trade. Wait for it to come down. There you go. Look for rejection and market breaking out of this with single print, and there you go. Easy money, guys. And even with one micro, these are like what, 44.12 all the way up to 44.44. That's like 32 handles, something like that. Even with one micro, that's like $300. Now 300 times 15, just think about it, how how much money that is. I'm not even gonna do the maths for you. Okay. Anyways, thank you very much, guys, and hopefully I'll see you on another video.